afternoon and of course, good evening traders from across the globe, and welcome to my 2731st edition of Short-Term Trading Live with Oscar. Traders, before we get into it, let me just say futures trading is risky, stock trading is risky, crypto trading is risky, risky. Everything is risky. Put your stops in. Put your protective stops in first before you begin to trade. You will be much safer that way. This video coming at you on a Thursday night for trading on Friday, April 5th, 2024. Traders, let's get right into this. On Tuesday night for trading Wednesday, I did a video. I stood out in front of the camera. In fact, I'm not getting in front of the camera tonight because I want to get this video out very quickly. But on Tuesday night for trading Wednesday, I got in front of the camera and I offered this analysis scenario. And in it, I said the markets are turning into a bearish environment. That was on Tuesday night for trading Wednesday. And here is what happened since. Look, now by Thursday, it already happened. The traders that answered the question that this would be a B trendline failure, you were absolutely correct. Great call. This is not a bull flag. If it was, it's been violated and it's gone. We've got trendline failure. Great answers. You know, most of you thought it was trendline failure, and I have to say, fantastic call. Myself, I didn't think we'd hold the flag either. And we have not, and I showed you reasons why. So, I came out in front of you on Tuesday night for trading Wednesday, and I offered this to you. Look, let's check this out for just a moment. This is Tuesday night's video for trading Wednesday, which is April 3rd. It's only April 4th, the evening of April 4th, that I'm speaking to you. And here it is.
Talk about markets. The landscape, number one on the board, the landscape is quickly shifting to more bearish conditions in our OMNI, S&P, NASDAQ, Russell, Dow, Transportation Average, the whole gamut. I will show you the charts. It's just like that. The landscape is starting to change.
Okay. Now that was literally a night and a half ago. And this is what happened since. It absolutely is starting to change. So my question to you now, in tonight's video, we have a new question. It's not about NASDAQ, which is what you're looking at here. It's about the E-mini S&P. How low do you think the E-mini S&P can get down to? Now, I'm talking about ESM24. What is your price target? How low do you think the E-mini S&P can get down to now that we have broken this channel? This is not a bull flag, and it is a channel violation. How low do you think the E-mini S&P can get? Please reply with your answers below. Let me finish the video if you don't mind and show you what I'm looking at, and then show me what your answers are. But please reply in this video. I want to see before the market starts moving what your answers are. How low can the E-mini S&P ESM24 get down to? Please comment below. Now, we have a red OMNI, right? Yesterday, the OMNI went neutral and told us, even though we have this green bar, don't believe it. Don't get fooled by it. Go neutral. The OMNI went neutral. Now the OMNI is dead red. The market is dropping. Fantastic call. But how did we know that? This is absolute proof, by the way. Me showing you this video and the market doing this, and then the news comes out 2 full days later. This is me Tuesday night, don't forget, Tuesday night, telling you that we are now shifting to a more bearish condition in the stock market. That is news coming out in the charts. Why? Because not until today on Thursday did the news come out, and Biden made a phone call to Israel about Gaza and blah, 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 and that's what they blame the move on. The move is because of what I showed you in the analysis in this video, which you can watch for yourself on my YouTube channel. But now let's go over the analysis put forth in front of us. We're looking at the NASDAQ. When we mentioned the jury was still out yesterday on that flag, and the OMNI went neutral, well, the jury is in. And here we are. So we broke the channel in NASDAQ. What else are we looking at? Look at the Dow Jones Industrial Average Daily Bar. Look at this one. Now, I've shown this to you in many videos, and boy, oh boy, it's been a really good chart to use because I showed you when the channel began. Begins here, runs and hits the top, or just about hits the bottom. The average gets involved. Runs up and hits the top, just about hits the bottom, catches the average. Jigger jags around a little, the average and the bottom, runs up to the top, hits the top, runs down to the bottom. What happened here? It broke the bottom. Unusual, right? So there's more happening. What would make these things happen? Well, if you go back and watch this video from 2 nights ago, you would find, by the way, it's video 2729, you would find these reasons and exactly why the market should break down, and here they are. I'll show them to you again. Let's see, we got to look at, okay, I've got a chart for us. On this chart, let's go look here. I specifically put this chart in front of your eyes and said, oh no, this is no good. It's not even going to stop for this so-called double top. It's going to go right through it. That was a so-called double top because of the top over here. I said, no way, it's going to go right through it. And I gave you my reasoning. What was the reasoning why crude oil would go right through the double top? Well, the reasoning was what I showed you in the video. This. Because the weekly chart had a breakout. The world is watching. Crude at this level is a problem for the stock market. And my words were that the stock market will have to adjust because of crude and because of something else. Let me show you another chart. Because of crude, as we've seen, getting very expensive, and because of this one. Your bond market. When you look at the 30-year T-bonds, you're looking at interest rates, and how this works is if bonds are going down, interest rates are going up. That is inherent. That's the way the relationship works. If bonds go down, interest rates go up. So I've shown this to you in many videos, but to reiterate very quickly, if this were a seesaw, if you will, a teeter-totter out in a playground, and if you had T-bonds here, and they're going down, your interest rates automatically go up. That's the way this works. The Fed does not have to raise rates for them to go up. If T-bonds go down, interest rates go up. So what do we have? T-bonds have been going down for quite some time now, right? Look. Slowly interest rates are rising. Crude oil, way too expensive right now. Between crude oil up and bonds down, the stock market has to adjust. Within 2 days of us recognizing that in this video, the stock market did adjust. How about that, kids, huh? Is that not fantastic analysis? That proves that news comes out in the charts first. It always has. It always will. Now, what else can I show you? Check this out. Let's go here. Let's check this one first, and then we'll go back. The Bloomberg Index, which is the measure of commodity inflation. Now, I've been joking for the last 6 to 9 months and calling it the measure of commodity deflation. Why? Well, come on, look at this thing. It seems to not want to do anything but go down, right? Look how far down this has gone. You know, let me just do something here real quick. Get rid of that silly extension. I just want to draw a trend line that I can see, and we'll continue on. All right, now I can see it at least. Look at this thing. It's been going down, 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 down. Boom! Hits 95.19. And while it was going down, anytime it came anywhere near the red line, it fell back down again. But look what's happened now. Boom! Something bigger has happened. And it might look small, but we got down to 95.19 down here. Don't forget, it was way up here, by the way. It might seem like nothing, but we were at 140.55. I mean, that's a huge inflation gauge. We came all the way down. Boom, working our way down to 95.19. But there's a problem now. And here it is. This is what it looks like now. It's no longer inside this red channel. It is exploding, and it's at 102.25. That is our inflation gauge. So between this, the crude oil, and the bonds, the stock market has to adjust. With that in mind, maybe we could do something about that. Something I had done in a webinar back here around January. In a webinar, I was teaching geometry, and I said the geometry I taught you says that CMG, Chipotle, should go up to 3,000. That was here. The call was made at the price of 14.02. Well, Chipotle went, wah, wah, 3,000 right there at the high. Boom! And it hit. So now that we're at 3,000, the target was hit. We're going to pull back a few hundred points. So you should expect at least a couple hundred points on the pullback in Chipotle. Now, if the markets are dropping because of high inflation and the price of crude, and because bonds are going down, which makes interest rates go up, well, it means Chipotle should come off a little bit, right? It's got to be a couple $100 easily in dollar movement, meaning Chipotle should be able to drop from 28.50 to 27.50, maybe 26.50. We'll see what happens. But Chipotle may be a short for you cats if you're looking for a stock. Traders, if you like these videos, if the information I am providing is helpful, please like, share, and subscribe. Do that now. Then answer the question, how low will E-mini S&P get? This is the ESM24, at least on my machine. That would be the symbol. How low will E-mini get? You let me know in a comment below this video. Please like, share, and subscribe. Help me out with the algorithms. And then remember to keep your emotions out of trading. Say this with me, kids, because by now you must know what I'm going to say. Are you with me? 1, 2, 3. Stop, soar, in. Emotions are out. Rock and roll traders, thank you so much for tuning in. Join me at livewithoscar.com. I'll be in my free trading room. No credit cards are required.